What if Quant is falling for a reason, the technical signals are still weak and sellers are clearly in control? But underneath all that weakness, QNT could actually be one of the more interesting, undervalued infrastructure projects in crypto. The big question is this: are we looking at a temporary discount, or are investors being trapped by the story of institutional adoption while the token struggles to deliver? Quant, with the ticker QNT, sits around the top 100 crypto assets by market position and has built its reputation around something that could become extremely important as financial markets move toward tokenization: interoperability. At the center of the Quant ecosystem is Overledger, an enterprise focused infrastructure layer designed to connect different distributed ledgers and traditional financial systems through a unified interface. Instead of asking banks or companies to completely rebuild their infrastructure for every blockchain, Quant's approach is to make different networks communicate through a common layer. And this isn't just a theoretical narrative. Quant has been pushing deeper into institutional finance, tokenized deposits, programmable money, and multi ledger infrastructure. In 2026, the company has highlighted Quant Fusion, its multi ledger rollup infrastructure, while also working around institutional use cases involving tokenized assets and digital money. That sounds impressive, but here is where the story becomes much more complicated, because a strong project does not automatically mean a strong token price. And if you are watching QNT right now, that distinction is extremely important. Before we go deeper, make sure you like this video, subscribe to the channel, and most importantly, leave a comment below. I want to know what you think about QNT right now: undervalued opportunity or value trap? From a technical perspective, QNT has been struggling to regain the momentum it showed earlier in the summer. The token pushed substantially higher during June, helped by excitement surrounding Quant Fusion and new staking related developments. But after that move, the market reversed. QNT climbed into the 70s before losing momentum and falling back toward the low 60s. That tells us something important. The market was willing to pay a premium for the future story, but when the initial excitement cooled, buyers became less aggressive. Recent price action has been characterized by lower levels and repeated difficulty reclaiming previous resistance zones. Around the current $60 area, the market is essentially fighting for direction. Technical models currently identify roughly $63 as an important pivot area. Above that, the first major resistance zone is around $65 to $66. A stronger recovery could then bring the $71 to $73 region back into focus. But below the market, the picture becomes much more interesting. The high 50s area is an important support zone, with some technical models identifying approximately $58 as a key level. Below that, the mid 50s become increasingly important, while the low 50s could represent a deeper downside target if the broader market turns aggressively bearish. So what does this tell us? In the short term, QNT does not have a clear bullish technical structure yet. The price needs to reclaim resistance and establish higher highs before traders can confidently argue that the downtrend has ended. Until that happens, rallies can simply become opportunities for sellers to exit. And that is where the ratings and signals discussion gets interesting. Unlike traditional stocks, QNT does not have a standardized Wall Street analyst consensus with a universal buy, hold, or sell rating. So we should not pretend that there is some official Wall Street strong sell rating on QNT. Instead, we have to read the market through price structure, momentum, technical indicators, sentiment, and project fundamentals. And right now, those signals are mixed. The technical side is cautious to bearish because price has struggled to reclaim higher levels. The fundamental side is much more interesting because Quant continues developing infrastructure aimed at financial institutions, interoperability, tokenized deposits, and programmable money. That creates a huge debate. Is QNT undervalued? Or is this simply another crypto project with a fantastic narrative but a token that hasn't yet demonstrated enough demand? Let's start with the bullish argument. Quant's biggest strength is that it isn't trying to compete purely as another consumer blockchain. Its target market is much larger and potentially much more valuable: financial infrastructure. Banks, payment systems, capital markets, tokenized assets, digital money, and interoperability could become enormous markets over the next decade. and Quant has continued building toward that direction. In March 2026, Quant announced a strategic integration with Murex designed to bring programmable money and digital asset capabilities into existing capital markets workflows. Quant has also highlighted work involving tokenized deposits and institutional financial infrastructure. Then there is Quant Fusion. The Fusion rollup represents a significant evolution of the Quant ecosystem, extending its interoperability ambitions into multi-ledger infrastructure. The mainnet went live in June 2026, giving the project another major piece of technology to point toward. If institutional adoption of tokenized assets accelerates, infrastructure providers that can connect different systems could become extremely valuable. And that is the strongest argument for QNT. The token also has a relatively limited supply. QNT's supply structure is one of the reasons long term holders have historically viewed it differently from highly inflationary crypto assets. But limited supply alone does not guarantee appreciation. This is where the bear case begins. The biggest risk is demand. You can have a limited supply token, impressive technology, partnerships, institutional narratives, and a respected development team. But if demand for the token itself doesn't grow fast enough, the price can still fall. That is the problem every QNT investor needs to think about. How much of Quant's future business success actually translates into sustained demand for QNT? That question matters more than almost anything else. Because investors sometimes confuse the success of a company or protocol with the value of its token. They are not always the same thing. Another risk is competition. Interoperability and tokenization are becoming crowded sectors. Traditional financial technology companies, blockchain infrastructure providers, layer 1 networks, interoperability protocols, and institutional consortia are all competing for a role in the future financial system. Quant has a strong enterprise narrative, but it still has to prove that its technology can capture a large and durable share of that market. And then there is volatility. Crypto markets don't care how good your long-term thesis sounds when liquidity disappears. A token can be fundamentally promising and still fall 30, 40, or even 50% during a major market downturn. That is exactly why retail traders can get trapped. They see a project with institutional partnerships. They see a limited supply. They hear words like tokenization, CBDCs, interoperability, and banking. Then they assume the price must eventually explode. But markets don't reward narratives automatically. Markets reward demand. Now let's look at the bull and bear cases. In the bullish scenario, QNT stabilizes around the high 50s to low 60s. Buyers return and the token breaks back above the $65 to $66 resistance area. If that level turns into support, the next challenge could be around $71 to $73. A successful breakout above that region would dramatically improve the short-term chart structure and could open the door toward higher levels. But the real bullish scenario goes far beyond technical resistance. The long-term bull case is that tokenized deposits, digital bonds, programmable money, and multi-chain financial infrastructure become mainstream. If major financial institutions increasingly require interoperability between traditional systems and multiple distributed ledgers, Quant could find itself sitting in an extremely valuable part of that infrastructure. And if using that infrastructure creates stronger recurring demand for QNT, the token's valuation could eventually look very different from where it is today. But now the bear case. If QNT loses the high 50s support area and cannot recover quickly, the market could begin targeting the mid 50s. A deeper breakdown could push attention toward the low 50s. And if the broader crypto market enters a major risk off phase, QNT could fall much further regardless of its fundamentals. The worst case scenario isn't simply that the price falls, it's that adoption develops more slowly than expected, competition increases, token demand remains weaker than the community expects, and the market eventually decides that QNT's current valuation already prices in too much future success. That is how a promising project can become a value trap. So, what is the outlook? Short term, I would describe QNT as cautious rather than aggressively bullish. The price needs to prove that buyers are willing to step back in. The $63 region is important for momentum, while $65 to $66 becomes a more convincing breakout zone. On the downside, the high 50s area deserves serious attention because losing that zone could change the short-term setup considerably. Long term, however, the story is much more compelling. Quant is positioned around a major trend: the transformation of traditional financial infrastructure into a more interoperable, programmable, and tokenized system. The question isn't whether tokenization will happen. The bigger question is which infrastructure providers will capture the value when it does. And that is where QNT becomes fascinating. Because if Quant's technology gains significant institutional adoption and that adoption translates directly into sustained token demand, today's weakness could eventually look like a discount. But if institutional adoption grows while QNT demand fails to keep pace, the market could continue treating the token as an overhyped narrative rather than a fundamental winner. And that brings us back to the question we started with. Is QNT falling because the market is temporarily ignoring a genuinely valuable piece of financial infrastructure? Or is the market warning us that a great story doesn't necessarily make a great investment? For now, the chart is asking for confirmation, while the fundamentals are asking for patience. And until price and adoption start telling the same story, QNT remains one of those crypto assets where the biggest opportunity and the biggest trap could exist at exactly the same time. So what do you think? Does Quant have what it takes to become critical infrastructure for the tokenized financial system? Or is QNT still too dependent on a future that hasn't fully arrived? Remember, this video is for educational and informational purposes only. It is not financial advice. Always do your own research, understand your own risk tolerance, and never invest money you cannot afford to lose.